following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom, you really assemble a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigers and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now, I would say.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Hi everyone, Basil Chapman sitting in for the one and only Tom O'Brien. Happy birthday, Tom. Enjoy your afternoon off. And I am the host of the Tiger Technicians Hour, usually at 12 o'clock, noon time till 1 Eastern time, that is. And I'd love to take your calls, 877-927-6648. Let's go to the numbers right now. And we've got the Dow down 121. Earlier on, it was much deeper to the downside. Hit 23,310 on the low. It's trading right now at 23,442. Most importantly, as far as if you're looking at my charts, this is on Tiger TV. On the left here is the daily chart. In the middle is the weekly chart. On the right is the monthly. Right here is the 120-minute chart. So let me show you the parameters we're looking at. Now, the tradition has been for years that we have not had anything like a 20% or 22% decline. That was way back in 2011. Since then, we've had very small declines, and intraday we've had declines, and then by the end of the day, the market has come back very strongly. Well, we'll see what happens in the coming 15 minutes or so. But in the meantime, what we're looking at, this is the first time technically, if you're looking on the daily chart, that the MACD, the moving average convergence divergence, has been decisively negative. The slow stochastic is still very good at 89%. And the on-balance volume, this blue line here, is just tipping down. So we haven't got many signs yet to say that this is a significant pullback. But on the day, it is one of the deepest we've had for quite a while. The weekly chart is still very strong. The monthly chart is extremely strong. So it's going to take a move towards the 23,000 level to really start impacting the weekly chart negatively. Let's go to the S&P. The S&P right now is also down. It's down 13 at 2580. It too had a very sharp decline. The low for the day was down at the 2566.33 level. It's trading right now at 2580.40. So we've got it under the 9-period moving average, just like the Dow. We'll see what the last 15 minutes has, because of course there's the whole tax thing. This is the first time that I said to subscribers to my opening call, that's my daily newsletter, that we've got enough dark cloud potential with the taxes and the economy, maybe stalling just a tad here based on some of the other factors I've been looking at. We'll see what happens over the coming two sessions. Going Friday into Monday is going to be very important in terms of this weekly chart. So S&P resistance now is at the 2587 level, and support short-term is going to be 2576. Let's go to the QQQ, because that's the Index 100 trading vehicle, the PowerShares QQQ Trust Series. It is also pulling back quite sharply, down 1.16 to 153.34 off the low and above the 9-period moving average. This is an index that is held extremely well, and even now it's holding well. The weekly chart, we'll see what happens, but in the shorter term, a break in the next 2 days under 151 would be quite negative very negative for the daily, start to be a little bit negative for the weekly. But a break above 153.30 going into Monday or Tuesday at an all-time high would be extraordinary action. So we're going to be watching that very closely. Let's go to the IWM, because the IWM has been one of the weaker of the indices. It's trading down 83 at 146.37. It's already, the weekly chart here has started to be impacted negatively, but there are no real signals just yet. We have to wait for the weekly chart to complete on Friday. Parameters are a move today above 147 would be very positive, and a move by Friday below 145 50 would say, uh-oh, going to be retesting today's low again. Let's go to gold, because this is going to be very interesting. Gold is, at this particular point, up 4.5 at 1288.20. This is, in the Chapman Wave methodology, what we're always looking for is we're looking for the legs. We want to count the legs. We want to see the fourth leg higher. This is only the third leg higher, and this is a positive. And I'm going to put that together with the dollar DXY. The dollar right now is down quite sharply, down 0.40 cents at 94.46, having made a little bit of a double top at 95.15 on the index. We're going to be watching this closely because the weekly chart has been improving a lot. My contention from my subscribers has been one of the reasons why we nibbled at the alongside in the gold today is my impression is that the dollar is going to take a bit of a breather after having a fabulous rally from the September the 8th low. That's actually where we went long for my subscribers, my opening call. And now it's taking a bit of a digestive phase, maybe 3 to 5 sessions. If it's longer than that, we're going to see something different, because then you're going to be looking at the GLD, which is the gold. This is a Spider Gold Trust, and it's trading at 122.29, up 0.66 in leg C. We're going to see that begin to test. Well, it could happen the next day or two. 125.55 was the high of the 19th of October. If it closes above that, then all of a sudden this candle right here, the candle of the 16th, with a high of 123.97, a low of 122.57, this is the daily chart, that becomes in play. So we're going to be watching this very closely. Let's go to copper, because copper has been pulling back since in May. You remember we were talking about those 4 peaks, peak Ds, where in the Chapman Wave we start to look for signs of either further strength or weakness. This showed a lot of weakness. So from the high that was made back, I think it was the 16th, the 16th of October, at 3.11. We're trading now at 3.08. We've gone to a leg C to the downside. The technicals are still very weak. And the weekly chart is just starting to weaken a little bit. So we've got a lot of things to look at for the next coming few days. ER, this is the euro-dollar currency pair. This is a very strong move off a low, and it's trading at 1.16. My contention has been that the 200-period moving average in the weekly, this chart right here, says that there's a chance that the euro-dollar could rally some, maybe get to the 117 9-period moving average in the weekly, and then come back and do a retest. And that's where we will see whether the dollar is going to have another leg up or whether that's it for the dollar in this particular phase. Let's look at the USD JPY. Now, we've got earnings coming out after the balance, very important. So let me just mention that the euro dollar is pulling back quite sharply here. Weekly chart has got strength at 112.65. It's trading at 113.21. Those are the parameters we're looking at. So I'm going to show you something here. The semiconductor index has had one of its deepest declines in a long time. Of course, it's had a spectacular run. It's basically the SMHs trading at 101.93, down to 2.37. This has had a spectacular run. Led the market, led the NASDAQ Index 100. All of these, the XLK, that is the S&P tech sector, led them all to the upside, then to that correction, the downside, and then to all-time highs again. Now we'll see what happens. I'll talk about it more when we get back. Basil Chapman, and this is the Tom O'Brien Show. My pleasure to be here. Be right back after this important message.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Basil Chapman sitting in for Tom O'Brien, and I believe, unless I'm mistaken, we have a guest right now. Do we have our guest? Is
Basil,
Andy
how are
Heck there? Hi, Andy.
Hi, Basil. How are you?
I'm very good. And, before we even start talking, because you and I like to chat a lot about different things, I'm going to ask you, please tell us what you do at TFNN so everybody can hear exactly what it is.
Oh, I look at commodities. I'm much more on the fundamental side than the technical side, but I do look at the technicals as well. Everything from gold, silver, copper, down to hogs and
hey, wait
cattle,
a minute, crude oil.
with everything
crude oil,
in
you're
between.
The expert. Yeah.
And crude oil, yeah.
Yeah, of course.
So that's what I do. I spend my day looking at these markets.
But Andy, you have 2 services here at TFNN. Tell us about those.
I do. I have my daily essential equities, which is a daily report that I put out looking at the markets on a daily basis in equities and ETFs with a bent towards commodities. Then I have my weekly technical commodity report, which is a 40 to 60 page report that comes out each and every Thursday morning before the opening of business that gives an up, down, or sideways call on 29 different commodities. And if anyone wants to order any of these services now, you will get a free my 12 essential lessons for trading commodities, which was about a $600 value. It's 12 one-hour workshops that I did about a year and a half, 2 years ago for TFNN.
I've got it on my homepage. They are invaluable, and the amount of information you give that most people that is real experience, because you couldn't read about that stuff, that you had to experience it. Excellent reports.
Thank you. So, what do you want to talk about? I mean, there's a lot to talk about, Basil.
So how about this? Okay. I'm looking at the TRCCI. This is the Thomson Reuters Commodity Index, Equal Weighted Index, trading at a recovery high. It's in my work, it's in a leg E, and the daily it's in a D, and the monthly chart has improved a lot. And I'll just tell you that for my subscribers, we went long. In August, I think it was, we went along the DBC, which is the DB Commodity Index Tracking Fund, which is a little bit more weighted in percentages towards the oils. And that has also made a new recovery high. So I'm going to ask you a question. In terms of crude oil, What are you looking at right now?
Well, there's a couple of things I'm looking at. So it's a loaded question. So the first thing is I liked crude oil too very much back in July after it bounced off the 42.05 lows, and I bought it, and I'm out now. I believe that it's becoming a very crowded trade. You have open interest, which is the total number of open long and short positions on the NYMEX Futures Exchange. You have it at an all-time high. Now, the market has also gone, the term structure has gone from a contango where nearby contracts trade at a discount to deferred contracts to a backwardation where the nearby prices are higher than the deferred prices, which tends to happen when prices move higher because of supply and demand fundamentals. But the backwardations have narrowed slightly over the past couple of days. Now, I'm not as friendly to crude oil as I was back, a few weeks and months ago. But I will say this. The political issues going on in the Middle East with Qatar, with Saudi Arabia, with Iran are such that this market is vulnerable to spikes on the upside. I wouldn't be surprised to see it at $60. I just think that the risk reward of being long up here is dangerous.
Okay, that's good to hear. And I'm kind of with you, except I think there's an unknown with the Saudi situation. I mean, this is really unusual. It's being handled in a very unusual way as well. So maybe this is more a warning than anything. I'm not sure, but maybe it's a warning. Therefore, if it is just a warning, then crude oil should start to subside pretty quickly. But if it isn't,
I'm not so worried about the domestic situation. I'm more worried about the rising tensions between Iran and Saudi Arabia,
right,
and the potential for that to escalate violence and attacks on production facilities, refining facilities, logistical routes, and that's where spikes can come from. What's going on in Saudi Arabia, I agree with you. I think this is a warning. I think this is an attempt to crush dissent. To clean up some corruption going into the Aramco IPO, maybe even for King Salman to hand the throne over to his son, Prince MBS. I think the real risk here is Saudi-Iranian escalation, and I think there's a real potential for that.
Would you then see the same risk in terms of risk management affecting positively the gold price?
It's possible. Now, gold's difficult because gold's got two things. One thing, it's bullish and bearish factors at play here, Basil. The first thing you have is this geopolitical situation, and you got to add to that North Korea and all the other stuff going on in the world, and Russia and China and everything there. And that is on the bullish side. But on the bearish side, the dollar is undergoing a recovery. I don't think that it's going to go on forever, but it could go through the end of the year. Interest rates are going to rise in December, and gold has a history of reaching seasonal lows for the last 2 years in December. So I'm a little bit more concerned. I see the rally going on in gold today that's taken up to almost $12.90 on the December contract. Problem is, silver isn't following, and that's kind of telling.
Yeah, I thought I had a mistake in my when I was reading it this morning when I did my show at 12 o'clock. I was looking at silver. I kept trying to refresh to see if there was some problem, but no, silver's down a little bit, and that's kind of for me a heads up.
That's not supportive. So mixed signals there. I think kind of the precious metals, other than palladium, is dead money here right now. I wouldn't be long. I certainly wouldn't be short. What I do like here very much is natural gas.
You do?
Let's talk about that. Yes, I love natural gas.
So tell me about, look at that. Yes, tell me about natural gas.
Last year, we made our seasonal low in natural gas this week. It came 1 week earlier this year. We rolled the November futures to the December futures last week, and we gave up the entire premium. And usually the November-December spread is a very wide spread because it represents the time of the year where we go from the injection season to the withdrawal season. Now, we're going to go into the withdrawal season with the lowest stocks in 3 years. And you're in Boston. You know it's going to get cold this weekend.
Yeah, it's actually gotten very cold the last 2 days. We had spectacular weather up until just a few days ago, and then whoops.
Right, so heating demand is going to go up, and that's the key factor for natural gas going into the withdrawal season. And we are going in with the lowest stocks in years. The injection today was only 15 BCF. We only have 3.79 trillion cubic feet in inventories. We only have 1, maybe 2 weeks left in the injection season. I would say 1 week left. And for the last 2 years, we went in with over 4 trillion cubic feet. We're going in this year probably below 3.9, maybe even around 3.8 trillion. And that's very, very low, Basil.
That really is. So you've got your show at 5 o'clock today, Eastern Time.
I do.
And I recommend everyone listen to the show. And you can just hear it. I don't have to tell you. It's a wealth of information in the commodities. Hey, thanks so much, Andy, for being here. And I'd love to listen to your show tonight at 5 o'clock.
My pleasure. Thanks, Basil.
Thank you very much.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Basil Chapman sitting in for Tom O'Brien. I usually do the Tiger Technicians Hour at noon every day. Let me just mention that I'm going to be doing, let me just get it right here. This is going to be, there it is. So I've got a webinar coming up, and it's going to be a really interesting one because what I'm going to be discussing is right there. This is for the opening call subscriber. It's just for subscribers, but you can sign up. You could be a member of the opening call newsletter, and you will be able to hear the 90-minute webinar that I'll be giving on the 20th of November. It'll be 5 o'clock till 6:30 Eastern time. 90 minutes, very intense. As anyone knows my webinars, I'll be discussing, can high techs continue to lead? And we'll go through that in a moment. Will the financials be impacted by yields, and where will yields be in 2018? The chances for inflation or deflation, the dollar and gold's longer-term outlook, autos, real estate, the socioeconomic, political nuances in the next phase of this market, worldwide stock market euphoric phase. You know that world markets have been screaming towards recovery highs, possibility of a serious consolidation before that happens. My contention has been that we're probably going to get some kind of a deeper correction before the next big phase starts. And politically, the chances for a third party are increasing, and stocks that could benefit or weaken, we'll be discussing that. So that's coming up. This is November the 20th. So if you sign up for a free trial, a month free, you'll be able to attend the webinar. Look forward to that. Look forward to a great deal. Look at this. Talking about world markets, this is the Nikkei. This is the futures. Went to a high this morning. Here it is in leg F in the Chapman wave. We're always looking for the D, E, or F to say, whoops, is something going to happen here to the downside? And what we're looking at is it's down 375, and it made a high. If there's a lower high bar tomorrow and it actually closes down again, that'll probably signal more likely an F than any alternate count. But this is what I would normally do. I would just grab my my toolbox and I'd draw in a rectangle at the bottom here, and I'd say, okay, if this is just going to be a minor couple of days pullback, then the low needs to hold. That's the low in the Nikkei futures at 22,335. Then I suspect there could be a bounce, and a bounce would most likely take the pattern of an H formation, a lowercase h, and that lowercase h should then reverse, and within a couple of days retest the low. And if it breaks this low of today, that's going to be a very negative thing. If in fact there's an inside bar tomorrow and the low of today isn't taken out at all, but in fact the Nikkei is trading at the 22,630, somewhere around there, then and on Monday, because there's potential for good news in the world, there's a push above 23,000. That's a different kettle of fish altogether. Then once, in this particular pattern, once the Nikkei goes to 23,170s and holds there for a day or two, there's a chance it could retest the high. My contention right now, based on the technicals, is that the upside is going to be very limited, and we're probably going to be looking at lower lows and lower highs over the coming 3 to 5 sessions. We'll see what happens. So let's go to this. I was talking about the semiconductors, and we were talking about, I had said earlier that NVIDIA, a very important stock, is going to have earnings come out after the bell. Well, this has been a leader of the leaders. This is NVIDIA Core, graphic processing for workstation, games, mobile devices. It's just everywhere. And look at this monthly move, almost parabolic. It looks parabolic, but really, if it had to go to the 240s, 250s, that would really be parabolic. And it's not there now. It's trading at 205, down 4. This is the deepest correction it's had in a long time, certainly in a single day, or let's call it 2 days from yesterday. So we've seen stocks like this pull back, the earnings come out, and then they spiral to a new high. And then the big issue is, can it hold the high without filling the gap for 2 to 3 sessions? That's daily. Or does it spike higher, and within 2 to 3 sessions, it's underneath the high that was made, the all-time high? That would be the high of 212.90 on the 7th. So we'll know, I believe, in the first hour, when after the 4 o'clock close today, while I'm doing the show, we should see NVIDIA come out with whatever the earnings are. They're probably going to be good. Will they be good enough? I don't know if there's even room for error here, because it's just been priced to perfection. We'll see. And that, I think, is going to impact the SMHs. Let me just tell you right now that the SMH is down at 102, down 2.29. Deepest, look at this, on a daily basis. You see this red candle here? You can go back right up until, even here as a single day, the 10th of August, 86.27 to 84.37. That's just 2 points. Today we've already seen 3 points, over 3 points. So this is one of the deepest corrections it's had for a long time. Now something I usually look at is that stocks don't often, and indexes don't often, have the volatility index scream higher right off an all-time high. Usually you start coming down, there's a bounce, and then out of the blue, about 3-5 sessions later, there's just terrible news, and you get this big red candle followed by another big red candle. So this is suggesting to me that there's still just enough good news in the overall spectrum that could in fact have a little bit of a bounce, and we'll see what happens in the SMHs, what happens with NVIDIA with the earnings tonight. If you look at the XLK is the S&P Select Spider. That's still, look, it pulled back below the 9-period moving average. Can you believe this is the going from the low that was made right here on the 25th of September? Look at the black line. This is the 9-period exponential moving average. I'm going to be discussing these when I do my webinar, just what it means, etc. But most importantly, look how the price has closed. It has not closed once under the 9-period, this black daily 9-period exponential moving average. Not once. Could have done it today, didn't do it. However, look at the way the MACD is just turning down, still very strong, but dipping to the downside in the faster moving average. That's called the 9-period differential. And look at this. At 97, it's still very strong, and the on-balance volume, the blue line, is dipping down. But so far, all of this activity is happening with very strong technicals. I believe for the XLK trading at 63.45 down 56 to really start to impact the weekly chart. This is the weekly chart right here negatively. You really look at the gap that was made. I think this is the IBM gap on the 27th of October. I might be wrong, but I think that's what it was. The low was 61.88. The high was 62.71. So the 61 to 62s, you got this 1 point gap. And I believe that at some point it will be filled. Will it be filled with making a new recovery high or not? Well, it's real, for me, it's very simple. If by Monday or Tuesday of next week, the low that was made today of 62.86 is not taken out, you're looking more at a sideways rotational correction, meaning that some stocks within the XLK, the S&P Select Tech Spider Fund, are starting to rotate and weaken, while some of the strongest are still holding this index up. And that's going to be very important. Now, if you look at the upside, a new high above 64.02 gets you to that leg D. But if there's a push above 64.70, in other words, it really takes it out by a lot, 64.02, it takes it out by 3/4 to 1 point, we could have recycled and we could be in a whole new buy mode. I don't think that's going to happen. Everything about this says sideways to slightly lower consolidation at best is coming up. That's the way I'm looking at it. We'll be back straight after this break. Basil Chapman sitting in for the one and only Tom O'Brien, birthday boy Tom O'Brien. I'll be back straight after this message.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi everyone, Basil Chapman sitting in for Tom O'Brien. Let's look at the XLF. This is the S&P Select Financial Spider Fund. It's trading down 7 cents at 26.18. Now, this is going to be very important. You see the low that was made right? This is the left side is the daily, weekly in the middle, monthly on the right. Look at the left side chart. The low that was made on the 13th of October at 25.89. What was the low this morning? 25.89, double bottom. This is going to give the, and this is going to be very interesting. Why? This is my contention has been, for my subscribers, we've been looking at the possibility that the TLT, this is the bonds, this is the Lehman 20-year T-bond fund, down 50 cents right now at 125.87, that if bonds rally, yields come down, that it will probably impact the XLF. But my contention has really been that if the bonds really rally strongly and the TLT can actually push into the high 126s, really get, now it has to get into the 127.30s in the next 2 days, that the rising bonds will imply that money is starting to migrate out of the stocks, that is in equities, and move towards the so-called safety of bonds. Now, that's my contention. The market doesn't know that. That's my contention, but that's the way it would be, I think, because if the yields start to, the TLT trading at 125.91 really takes that 124.50 support, probably it's going to go down much more. And then we'll be looking at, look at this chart right here. This is the I call it my triple yield chart. I show my subscribers every week. And this is a weekly chart. So it shows this is the 30-year, the white is the T, the 30-year T bond yield. And it's trading in this down channel right here. It looked like it wanted to break out, and then 2 weeks ago it just turned around, and this week it followed to the downside. The brown is the 10-year T-note yield, trading at 23.31, 2.331, and it's once again it pulled back, same as it did last week. The week is young, still a whole day to go, and then the 5-year is right here. It's holding quite well. Now, if you look at the steepness of the decline in the 30-year, and you look at the steepness of the not such a steep pullback in the 10-year, and just a mild pullback in the 5-year, these two guys here, the 10 and the 5, are going to give us a lot of information over the coming weeks. So then, you know, there's the flattening of the yield curve. There's a whole bunch of things that go on that often affect the market. But at this point, I'm just looking at this and saying, let's see what happens, because so far, the arch formation has continued to be the pattern. Will it remain so? And will the 5-year trading at 2.003 break under 2? And we'll see what happens there. Now, there's something else I wanted to just mention because they've been so important. Wood, which is the iShares Global Timber and Forestry ETF, this is a weekly chart. made an all-time high last week at, I believe that's correct, 70.69. So far this week has not made a new high, and this is leg E. Very strong move to the upside, but this is going to be very important. Why? Because this is international. This is worldwide, global timber and forestry, and it's really acting well. Kind of corresponds to how copper had moved up quite sharply, but has been pulling back. This has not been pulling back. And this is the HGX, the Philadelphia Housing Sector Index. And this is really important because it has made a new high this week. And last week was 322.35. This week is 323.89. So it's over $1.50 higher. And that's very important because if yields pull back, that will give some support to the housing market. Now, a couple of things that I should mention as well is that within the overall context of the markets, the IYT, and this is going to be so important. Look, the IYT is the iShares Transportation Average, ETF. And it's been just dropping since it hit 101.57 back on October the 13th. It's just been plunging. And crude oil has been rallying, and that didn't help. It didn't help the XAL, which is the airline index. The ARCA airline index made a peak in the daily. It's gone all the way back. The high that was made at 122 back on the week of the 21st of July of this year. Look at the plunge. 122 down to 103. Bounces up to about 114, trading now at 103. Look, the pattern that I call in my CD introducing the Chapman wave methodology is the pattern that I call the H lowercase h formation. Look at this. It's come down very sharply there, and then it makes an arch formation. In this case, it's kind of inverted V, but it's like an arch formation, and now it's about to test the left side low, this lowercase h. If the IYT in the next 3-4 days takes out 102.40, and next week actually closes under that, that's not a good sign for the market. So the divergences are really what I've been talking about, because if you look at the NYA.X, this is down 47, way off the lows of the day. The low was down to 12,268. It's trading now 100 points higher, 12,338. So what we're looking at is it's still been a very choppy to down, so lower lows and lower highs pattern. Weekly chart is still technically quite good, but it's starting to test the 9-period moving average. So I'm looking at the divergence where the broad New York Stock Exchange index never confirmed the new highs that were made by the Dow, the S&P, the QQQs, and the semiconductor index and the XLK. And that says that there's a divergence between the different sectors. But if you look at the USO, which is the crude oil, the United States Oil Fund ETF, that's what it is, it made the candle that it made yesterday and the candle it's making today is so for a high-level consolidation. And the MACD, this is the MACD right there on the daily chart, very strong. And the stochastic is at 91%. I say, if you look at the textbooks all say that if you, let's see, if the stochastic is over 80%, the term that is almost always used is overbought. And if it's under 20%, it says oversold. I say that's diametrically opposite to what you should be thinking. Look at when the price holds above 80%, that's the 80% line. Look how beautifully the price can hold. When it goes underneath, like there, look what happens to the price. Holding above 80%, good. So going under 20%, look at this in the weekly chart of USO from 2017. Stochastic has been horrible, went under 20%, held there for a long time. And look what happened to the price. Wrong way of thinking of it. This is, you can call it oversold, but actually what you need to do is say it's in an area, a negative area, and that area will turn positive if the price breaks from under 20% going above it. And here, when you're above 80%, it's a positive. It'll go negative, technically, when it goes underneath the 80% line. So USO so far acting very well at 11.47. If it breaks under 11, $11, something else is happening that'll impact the weekly chart negatively. But so far, it's holding pretty well. Now, the VIX index. We have not spoken about the VIX index because I wanted to hold off until towards the end of the show. So the VIX is trading at 10.64. I had a call during my show earlier this morning. Someone had the volatility index, the TVIX, 2 times long, and it was trading, I think, near 9. And we had said that take some profits right here, and then I can't remember the price. Did I say 920? Take some more at 920. Now it's down at 840. That's how quickly this thing can move. I'll be right back. Basil Chapman and Tom O'Brien Show. I'm the host. I'll be right back.
Larry Pezzavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman sitting in for Tom O'Brien, and we're looking at a market that is trying its best to crawl back as it's done so many times, but so far it hasn't succeeded all that well. It's still down almost 100 in the Dow, down 9.50 in the S&P. Look at the E-mini, down 9. This is going to be very interesting. This particular candle that we're looking at here has the potential to be what I call a Chapman Wave Roman candle. Chapman Wave Roman candle, and I'll explain right now what I'm looking at. What happens with a candle like this, if at any point in the next, usually it has to be within 2 bars without making a new high. If it starts to trade halfway into this wick, Roman candle, Roman candle blows up, you light it and it goes up and then blows up. So what we're looking at is if it gets to 25.74 and holds there for two 120-minute bars. So let's say 2 out of 3 120-minute bars, consecutive bars. Then there's a real good chance it's going to come back and test 25.83, 25.63.25, the low of this today. And so that's, keep it in mind. If it closes above the high, then if it closes above 23.94.50, either today or Monday, that actually turns out to be a positive, and it makes the 9-period moving average right here. There's the E-mini of 25.81, really important support. So let me do a couple of things here. The VIX index, which is the volatility index, screamed. I do not like it when volatility index screams to a very high level, right as a new high. Is almost within a day of a new high, because that's kind of not the way it works. Usually the market goes down. We had a call this morning about the CHIN, the short-term trading index. It just kind of ignored everything. It acted as if, whoa, I'm on vacation today, folks. I'm not even here. It was down to 54 level, and that's nothing. It should have been up at $1.90 or so. So keep it in mind. We'll go into the next hour and we'll discuss it further, but watch the VIX index tomorrow. If the VIX index screens back into the 11s, that'll say, uh-oh, now we're starting to hit down. But if it goes down below 10 and says, no, nothing to see here, folks. Basil Chapman sitting for Tom O'Brien. I'll be right back for the next hour straight after this break.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Hi everyone, Basil Chapman sitting in for the one and only Tom O'Brien, who's on a birthday afternoon vacation. I hope he enjoys it. Well deserved. I know a harder working person than Tom. And let's go to the market. Now, the Dow was down 101 points. This is very important because at 23,461, it closed just underneath the 9-period exponential moving average. See, this is the daily chart here on the left. In the middle is the weekly. On the right is the monthly. Monthly is spectacular, just beautiful, beautiful pattern. Let's see what happens in November. But what's really important is the weekly chart is bumping into resistance, very strong technicals. And on the daily chart, look at the low. The low went to 23,310. If you're looking at this black line, you'll see that since the breakout, November the 11th, the Dow is not at 21,927. the Dow has not closed under this 9-period moving average until today, the very first time. So for my opening call subscribers, we were fortunate because some subscribers have been long from 22,290 position, and we recently went to the short side. We added some to the short side today. Why? Because we were anticipating that the Dow would test the 9-period moving average from yesterday's close, and could even then, if it broke it, could even hit the 20-period. Wait a minute, the 20-period, that's this pink line right here. It hit it exactly, but then it rebounded strongly. So I want to go through a couple of things here as we go through the numbers. So the parameters I'm looking at, if the Dow goes to 23,520s tomorrow, that's pretty darn good action. If instead there's just an unchanged Friday close or a down close of minus 60 or more, that's suggesting we have begun the consolidation phase, which is what the technicals are indicating in the daily. Weekly chart, still there's not a sign yet of some kind of a short-term top even. So until the Dow cracks the 23,100, 23,000 support, the weekly chart is still going to be acting very well. The S&P, SPX.X, the S&P right now is down 9.76 at 2584. It has closed below the 9-period moving average. That was that big shocker on the 25th of October. Dow was sharply down, and then it came back and then ran higher, and then it never looked back. In fact, it's been going higher since then. Today, the low of the S&P at 2566 tested the high, which was 2567 on the 25th, and then it rebounded. So a lot's going to happen. A lot's going to happen also because of NVIDIA, which has been very instrumental in the SMHs, the semiconductor ETF. This is the iShares trading at 102.27 down 2. This is the deepest correction it's had in the daily chart in a long time. It closed just under the 9-period moving average, first time in a long time. Weekly chart is still spectacularly good, and the monthly chart is tremendous. So that's saying that if NVIDIA impacts one of the best of the semiconductors, if it impacts when the earnings come out at 5 o'clock in another 50 minutes or so, if it impacts the market negatively, the SMHs, and I believe the SMHs led the market up and down all year. So if they start to pull back sharply here and the SMHs break under 101 by Monday or Tuesday, then what we're looking at is, for the first time, we're looking at some kind of lower highs, lower lows consolidation rather than this high-level rotational correction, which just goes sideways as one sector corrects and the other sector that had been weak strengthens. This has been the name of the game for a long time. So NVIDIA trading right now, NVDA, it's had a lot of volatility. Even since the close, it's down 2. I don't believe the earnings are out yet. I think it's got another 50 minutes to go. So it made a peak in the daily chart on the 7th, a few days ago, at 212.90, trading now at 205.32. Hit 200.37 this morning. So that is a lot of volatility, but it is how the market reacts to whatever. There is no room. This is priced for perfection. There is no room for a mistake. If there is, in fact, some kind of a miss, that miss is going to suggest that the SMHs will be coming down. And, of course, there you've got Applied Materials that a spectacular move until recently. It made a high of 57.34. I call it a peak E in the Chapman wave, and now it's trading at 55.48. So no big deal, 2 points, but it's the arching formation. Look at this arch formation. It's just a heads up to say, hey, watch out, because a close below 54 in the next 2 days would suggest that finally the daily chart at least is going to go to a sell signal to sell mode. Mode is deeper than a sell signal, and then you'll impact the weekly chart. However, you've got to also include the you've got to include LRCX, which is Lam Research. Lam Research trading at 206.29. Whoops, now it's at 206, 31. Down almost 5 points today, but still a high-level consolidation, really a more rectangle formation. So Lam Research goes to 212. That's a really good action. Lam Research goes to, from 206 right now, goes underneath the candle of the 1st of November, under 200. And that's in the next 3-4 days. That's saying, time for a consolidation. So now let's go to the IWM, which is the Russell 2000. Had a pretty decent day in terms of not closing as badly as the others, down 0.25%. The others were down 0.40, 0.30 or more. We're looking at a leg E to the downside, and to make it real simple, if the IWM at 146.83 can push above 147.20 anytime tomorrow or Monday, that's going to be not bad action. Not great, but not bad. If it goes to the 148s by Tuesday, that's saying, hey, you know what? The rotation says the bigger caps can start to pull back. The IWM, the smaller caps can start to have a little bit, because the smaller caps have been pulling back since the top was made back on the 9th of October. Now, this is going to be very interesting because within the context of the markets, gold had a kind of a nice day. It's had rising highs, making a kind of a U-shaped pattern at 1286, up $3. If gold really needs to get above 1295, I'd even say 1297, to say, aha, now gold is going to have a pretty decent rally. I've been thinking, and I've been telling my subscribers to my opening call, daily newsletter, that I think that the dollar, which we've been long from the day of the low, the 70-week low, we picked that exact day with the left side, right side price time match right there at 91.01. We decided that was a perfect time to go long. So we're looking at the dollar showing strength in the weekly chart, maybe a little more strength than gold in the intermediate term. So it's going to be important to see if gold breaks about 9 points higher and the dollar goes about 70 points lower. Then I think you've got a change in trend. Basil Chapman sitting in for Tom O'Brien. I'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman sitting in for Tom O'Brien. Dow was down 101 at 23,461. The S&P was down 9.75 at 2564. The TTD, the Trade Desk Inc., one of the Investors Business Daily top stocks, is down 8 at 53. It hit a high just recently right here. Let me just, in the monthly chart, this is in leg D, and it hit a 67.30 high, and now it's at 53. So yeah, it's a pretty big pullback. This is a self-service platform for digital ad campaigns. That's really a very, very big field. So as I said before, NVIDIA we're looking at, and mentioned that Dave White had said it looks like a lot of shorts piling in on NVIDIA before the news. Yeah, look at this. Now it's only down 387. Oops, now it's down 6. Good grief, what quick moves it's having. Yeah, so there are shorts, but I'm not sure. It's a little hard to say. We don't know if they're shorts. Maybe it's people also thinking there's going to be a pop. But all I can say is that in another 40 minutes, you'll get the report on NVIDIA. It's going to be really important. And I'll just give you the parameters right now. The high was at 212.90, and it closed at 205. So if there is a move of 8 points or more to the upside that holds all the way through the evening into tomorrow morning, that's absolutely going to help the general market. It's going to help the SMH, the semiconductor index, and of course it's going to help the QQQs and the XLK, which I was talking about earlier on, which is the S&P Tech ETF. However, for whatever reason, having been priced to perfection, if there's even a blemish, even just a little bruise on this fruit, we're going to be looking at a pullback, and that pullback says earnings out. And that pullback says, we're looking at it right now, earnings are out. It's trading at 211.85, 211.90, going for 210, 209, 209, 209.53. So this is what we're looking at now. It's down, now it's up, now it's down. So this is going to be very interesting. Why? Because of the effect that it's going to have on the SMHs. And all I can say is, that the day is young. You've got to listen to the report. You've got to listen to a lot of things. However, this is not up 9 at this particular point, and that's suggesting that whatever the report has, just initially, it isn't quite what was expected. And one of the reasons why, for my opening call subscribers, we actually went short the SMHs today. We've done it quite a few times with very small losses, just tiny percentage loss. But this time I felt that there was a much greater chance because of what I call this dark cloud that is being emitted with the tax, with the politics, with the just basically across the board. We're looking at a situation where if there's any negativity in the lead index, the SMHs, then all of a sudden you're looking at the SMHs NVIDIA impacting the SMHs. The SMHs, that's the semiconductor index, impacting the QQQs, that's an index 100, which will be impacted by the XLK, which of course has Intel and others in it, the select tech sector S&P fund. And then what's really important is that the divergence that we were looking at between the New York Stock Exchange being weak, the very broad New York Stock Exchange, we will see something else happen. So yes, it was down 2, now it's up. Now it's down 70.76 cents. Now it's up 84 cents. There's nothing to do. Let's just watch it and see how it plays. You want to see it overnight, then you want to see how the market accepts it in the morning. That's really the first half hour is going to be very important. So I wanted to spend a little time with that because for my subscribers, we've been looking at the rotation through the different sectors. I'll show you now what I'm talking about, the XLK. Look at this, made an all-time high just yesterday, traded down to 63.52 today. Yesterday's high was 64.02. It's real simple. If it just sneaks above 64 and then goes down Monday and Tuesday, I'd say be careful. You're starting to roll over. If there's a very strong close in the XLK Yeah, that's the S&P Select Tech Spider Fund, somewhere in the 6430s. By Monday, Tuesday, it says, no, we're not quite ready to go down yet, folks. You might think it's going down, but we're not ready. So I'm just giving you the parameters, and that's really what we want to look at. Now, let me do this. I was asked if I would do the VIX index again. Yeah, the VIX index trading right now at 10.50, had a high today of 12.19. So I don't need to tell you that going from the 12s to the 10s is a big decline, but it did hold quite nicely at the end, considering that there was an attempt to come back in the market. But really what we're looking at, look at the weekly chart in the middle here. You see all these red candles, just time-wise, with the MACD starting to move higher, the histogram, that's the 9-period differential, is telling you the distances between these two moving averages is starting to improve, almost positive. And if you're looking at the flat stochastic, it's saying there's a chance that if tomorrow we actually have a green close and the close is above 10.06 is the 9-period moving average, which is closed below, all except 1 week, which is the week of the 8th of September. And then before that, from the high of 17.28, that North Korea scare, it mostly red candles, regardless of where it was during the week. And we have seen so many times how Thursdays can see the VIX index strong, and then Fridays, whoosh, it just goes down and it closes below that 9-period moving average. 10.02 in the daily, 10.06. You watch that tomorrow. It's the volatility index. I get a $VIX. You can go to your platform and you'll be able to find it. It's called the VIX index. I think it's going to give you a lot of clues. Why? Because if the Dow's down tomorrow 60 points, the S&P's down 8 points, and the QQQ actually takes a bit of a dive because NVIDIA actually is down sharply, then that volatility index should start to spike. And that'll be very unusual to make all-time highs and the very next day start to see the VIX index start to scream high. And what that would say is that the quicker the VIX index starts to scale much higher into the 12s and 13s, you've got to be careful, because that's also saying you've used up too much quickness. It's been too quick to get there, and that you've got to look for counter-trend rallies. So it's going to be price that determines everything. And I'm just making it real simple. Let me go through this again. INDU, and my subscribers will know that this is what we're looking at. If the Dow goes under 23,400 anytime tomorrow and then starts to increase that slide, that's going to be a negative and say, nope, now there's going to be follow through to the downside, not the upside. If for any reason, well, the high today was 23,516, I'm saying 23,520s, somewhere around there, that's really good action. That's just saying, nah, we're not yet ready. And it could also coincide with whatever happens to the news with taxes. I don't think anything's going to happen very quickly. There's just too many conflicting interests going on there. Okay, now let's get to some other things. The TLT, this is the Lehman 20-year T-bond fund, closed down 49 cents, held the 9-period moving average. I've made it quite clear that this is my thinking. Thinking doesn't mean it has to pan out, but at least it gives you a roadmap. And my roadmap says that T-bonds, if the T-bonds rally and the TLT goes at 125.50 right now, screams into the 127.50s by Monday or Tuesday, money could very well start to flow out of equities into the safety of bonds, and we could have a few weeks of consolidation. That's kind of the way I'm looking at it. Basil Chapman sitting in for Tom O'Brien. Dow was down 101, S&P down almost 10. I'll be right back after some messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You Do. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. Basil Chapman sitting in for Tom O'Brien. My show is usually noon till 1 p.m., the Tiger Technicians Hour. And I should mention that I'm going to be doing a webinar, and this is going to be a very interesting, timely webinar. It's right here, the opening call, subscribe event, November the 20th. Basil Chapman will be hosting a 90-minute workshop for all subscribers on what we can anticipate for the trading year ahead. Sign up here now to attend, and this is going to be very interesting. You will, if you sign up and you aren't a subscriber, you can have 1 month free. You get my daily newsletter. We've had some really good calls, and we'll see if the calls for today are going to be good. We did go short a number of issues, and they've had some nice breaks to the upside for us. We went the inverted instruments that you buy them and there are short positions already. But what is really important about this particular webinar, and let me see if I can find it right here. I'm going to be talking about, it's really titled, what are we looking at for 2018? And it's going to be very important. What can we anticipate for 2018? I want to talk about, can the techs, which led us through the last 2 years, can they continue to lead? But what other areas will take over if the techs take a well-earned breather, which I think they're about to do? Will the financials be impacted by yields? And my contention has been that the yields, at this particular point, the yields will come down if we're going to have a breather in the market. The market is going to pull back. Why? Because it's very important that money migrates from stocks to the safety of bonds if there's going to be a sustained pullback. Otherwise, you've got a rotational aspect that will keep seeing the market hold very well as one sector takes over from the other sector and leads when the other one's weak. The chances for inflation or deflation, it's something to discuss. This is that I'm going to be talking about in the overall spectrum. There are, now we know from what's happened with China and all, we know that there are countries that are vying for we want to buy something here, There are countries around the world that are vying to sell us that product. Not only that, you've got Amazon, you've got competition for lower prices, and at the same time, the things that we really need, insurance, etc., skyrocketing, rents here in the Northeast, just out of sight. I want to put that together in this workshop. The dollar and gold, the longer-term outlook, autos, real estate, the socioeconomic, political nuances in the next phase of the market, worldwide stock market, euphoric phase. Hey, just look at this. This is, in fact, the Nikkei. Nikkei went to recovery high, and then it went to what we call a leg F in the Chapman wave right here. Oh, that's the NQ. Sorry, the NQ is in a leg F as well. This is NK. This is the futures. Went to leg F. Pulls back down 300 points from at 22,660. So far, this candle is suggesting that the upside could be very limited, and we're going to be looking at it. But look at the breakout in the monthly, this leg D. Are we looking at a worldwide? You've got Germany. You've got just around the world. You've got stock markets. Many have been on a tear over the last 6 months. So I want to try to put the possibilities of a serious consolidation before the next big move up. This is really what I'm talking about right now. This is going to be very important, and I think we are going to have a consolidation. The political chances of a third party are increasing. I want to talk about that. Stocks that could benefit or weaken. That's this webinar coming up. You want to participate? Sign up. You can sign up for free for a month of my newsletter. Check out the front page of TFNN. So now let's just go to the NVIDIA right now. Of course, this is before any discussion. I don't think they're having a conference right now. It's down 5 at 204. So this is going to be very important. Why? Because it's going to impact the SMHs. Look at that. Down at 102.27. But wait a minute. The XLK we just went through. Now, there's something that I don't often talk about. I don't want to be buying it here, but at some point in the future, I think we've missed the move to the upside. I'm sorry, I spoke about it for my subscribers for a while, and I just didn't get in. Bots, this is the robotic. Look at this. This is a leg D. In Chapman Wave, you're always looking for Ds. It went to a little doji D, reverses today. This is the Global Robotics and AI ETF. Look at this spectacular parabolic move. I would not be buying it now, but this is something that's on my list to be buying for my subscribers. We'll see when it pulls back. What does it do if it ever tests the low that was made just 3 weeks ago at 22.66 and it's at 23.97? What if it breaks below it? Where would you be wanting to buy? These are things I'll be discussing because in every one of my webinars, we always have stocks that we want to be buying, stocks that we're looking at, stocks that we are studying. So that's going to be very, very important in terms of timing as well. The 20th of November, a week from Monday, perfect timing for any pullback because the next 2 weeks are going to tell us about what's happening with high-grade copper. High-grade copper right now is trading at 3.09, trying to find some support here. But in fact, it's quite a bit off its highs, but it's holding very well. Is that telling us something? You remember wood? I just spoke about the global ETF wood holding very nicely. Look at that weekly chart. Look at the monthly chart. Is it telling us something? Maybe it's telling us a lot of information. So let's go through this very slowly. The parameters that I'm watching have to be based on levels of support and levels of resistance. So the QQQ is what many people use as some kind of a benchmark because, of course, you've got what? Google, you've got many others. Google, the QQQ at 153.76 is saying a push into the 155s by next week would be extremely positive. A pullback below 151 says, uh-oh, consolidation is unfolding. I'm trying to make it as simple as possible. Here's the other thing. Within the context of the market, if you look at Amazon went to a new all-time high yesterday. It held very nicely today, just down 375. The way the MACD is, very strong, stochastic at 96%. I don't think it's just suddenly going to pull back in a day or two. So we might find that there is in fact, you're looking at within the context of the markets, you're looking at some of the very big leaders like an Amazon, especially going into prime season, and a little joke there, prime season, could could hold very well. If you're looking at a Google, I'm going to go to Google, this is Alphabet, and I had an explanation the other day. I said, it's so hard for me to say Alphabet when Google was so perfect in terms of names. If you're looking at Alphabet, trading at 1,031, down only $8, came back from its low, we might find that these stocks are able somehow or other to keep the markets buoyant a little longer, keeping it more sideways than breaking to the downside. So this is going to be very important. Why? You see the gap here in Google, GOOG, trading at 1,008.20, the low of the 27th, hasn't filled that gap. When Google finally fills this gap, I say full, it has to go to fill it, has to break the high of 987.60 on the 26th of October. When it begins to fill that, we will find that the market, in fact, this could be where the market gets its second wind to the downside. If, in fact, by tomorrow or Monday, we're looking at the market starting to really take on water and start to subside. So you're looking at that. Netflix, NFLX, Netflix, is not as good. It made a high, an all-time high, back on the 17th of October at 204.38, trading now at 193, just 10 points low, not a big deal. But the weekly chart is starting to show some weakness. I'll talk a little bit more about that when we get back. We also want to look at crude oil, and that is up 28 cents. I'll be right back. Basil Chapman sitting for Tom O'Brien, and the Dow was down 100, and the S&P was down 10. Be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Everyone, Basil Chapman, Tiger. This is Basil Chapman sitting in for Tom O'Brien. That's right, Tom O'Brien. So a whole bunch of questions came in M, which is Macy's. Macy's had a huge day today, up 10.42% at 19.40, up 1.83. I must have said something about the earnings or whatever, but the monthly chart is really terrible. The weekly is just terrible, but it could be a bounce, and a bounce could be a nice percentage. So let's just say, for instance, that the semiconductors now have a little bit of pressure. It's not much pressure, but it's enough pressure to at least allow some of the shorts to finally make a little money in, say, in NVIDIA, and there's a pullback. What's really important is that we've constantly seen other sectors, like when there was a correction in the banks at one point, the IBB, the biotechs ran up. And now we're starting to see a correction in the banks because the TLT is starting to rally. And now you haven't got those higher yields that the banks really needed as part of the petroleum they needed, the fuel they needed to be moving higher, or the wind at their back. So let's see what happens there. We'll go through the XLF in a moment. But Macy's, nice bounce. I would say to you that if Macy's is able to hold 18.74, the 9-period moving average, it's at 19.50 right now. If it's able to hold 18.74 tomorrow and then has a little bit of an update on Monday, maybe Macy's could start to fill in the gap and try to get to the 21 area, point and a half. Maybe an 8 to 10% rally. That would be good. Let's see what happens to the general market in the meantime. Question about Bank of America. Bank of America had quite a sharp pullback, and it closed at minus just 28 cents lower, but it did hit a high of 27.98. So we've been long for my subscribers from about the 23s, and now it hit 27s, and now it's in the 26s. This is going to be very interesting because it is a peak E in the Chapman wave in the weekly chart. That's the middle chart. Weekly chart is a leg D. Could be a peak D if there's no new high in the whole month of November. I'm really watching this closely because we've had a very nice gain, and I'm thinking that the financials, the XLF, will in fact, so the question was Bank of America, JP Morgan, XLF, that's the S&P Select Financial Spider Fund, made a peak F in the Chapman wave back there on the 2nd of November at 26.93. Pulls back to the 25s, is at 26.16 right now. I have to watch this closely. I would not be surprised. I suspect that this is a sector that will have a fantastic move up later on. Later on could mean 6 weeks' time, 4 weeks' time, 2 months' time. I'm not sure yet. I have to see how the next week or so goes with the key support in the XLF in the 25s. Let's see what happens there. But that's my thinking, and therefore we might have to just take profits and try to get back in. At another point, I was hoping to hold it for a much longer time. We'll see. So that's the XLF. The next question was commodities. Yeah, I spoke to Andy Hecht. Don't forget, straight after my show, straight after Tom's show, which I'm doing for him, at 5 o'clock will be Andy Hecht, just a font of knowledge in the commodity field. Listen in, and you'll learn so much, as I always do when I get a chance to listen. So I wanted to show you that the commodity index, actually I will go to the commodity index that we own, my subscribers. We are long from the 14s, and it's at 16.43. Mostly it's been the benefit of, I identified that could be a decent rally in crude oil if certain things happen. They have happened. All our targets plus some have been met. In the weekly chart, we got this left side, right side price time match in a quicker time above the peak D of the 20th of January at 16.08, screams up to 16.55. Now there could be some kind of a consolidation, but we're talking about crude oil, which is impacted by Middle East events. So I'm going to be watching this very closely. Here again, maybe we should be taking profits. I did say to subscribers, take a little bit off, just reward yourself because it's done everything that we wanted. We'll see what happens, but I can just make sure that 16.43 DB Commodity Index Tracking Fund, a close in the 16.80s would be really positive action, and a pullback below 16.10, let's call it 16, it's at 16.43, so pullback below 16 says, uh-oh, timeout, could take quite a bit of time, be careful. I'm just looking at it, trying to make levels that make it really simple. Now, I want you to just go back and show you that NVIDIA is now down 5, almost 6 points. This is opening tomorrow. I don't know if they've made a statement yet or what. I'm watching this closely because I think NVIDIA, as I said before, I showed you Applied Materials, showed you, what was the other one? LRCX, Lam Research. These are key stocks, and they're starting to just digest the gains slowly. We'll see what happens, but this is going to be very important. So another question, which I think is important right now, I forgot to mention, was Apple, because we were looking at the top, the FANG stocks. Apple trading at 175.90, holding beautifully. This is going to be a key. Now, let me do this because I'll be discussing this in my webinar as well, but I will be having an entire day session based on the Chapman Wave methodology, but let me just do this for now. This is the daily chart. When the stochastic, the slow stochastic holds above 80% for a long time, that's very positive. When it starts to decline, you've got to be careful. Look how the prices of the MACD, look how it follows the price movement of the fast-moving average of the MACD and to a little extent the stochastic. However, let me do this. I'm going to show you something very interesting. Look at the XLK. Let's go to the XLK for a moment. Look how long it held there above the 80% level. And then there was a pullback, but just a minor pullback. Look at this. It went up and down below it, and there was a little deeper pullback, but still held key support levels. This is the 50-period moving average. Now look what's happened. You've had a very long period, or beginning of October, breaks above the 80% level, and then end of October it pulls back. But this time you barely had any pullback at all. Now look what's happened to the MACD and the stochastic. The stochastic's up at the highs. The on-balance volume, the blue line, is almost at a point where it usually turns around. I'm watching this closely because on a purely technical level, at 97%, to go under 80% in the stochastic, you would have to see this XLK, the S&P High Tech, the Tech Sector Spider Fund, pull back way under 62, probably 61.80, and you'll finally see it under 80%. So it's a lot to ask for. And therefore, I'm looking at this and I'm saying, unless there's a smash to the downside over the next 2 days, we might find you're just going to make gently lower lows and lower highs. And that could go on for a little bit more. In the den, let's see, Dana mentioned CLAC. This is another one of those semiconductors. CLAC went to peak A, B, C, D, E in the Chapman Wave right in the first of 110 round number. Oh, those round numbers. When I see them, I always say, watch out. And look where we are right now at 102. 110 round number to 102 in just 6-7 trading days. Let's be careful. Yeah, that's really what I'm saying. It's time, I think, for the semiconductor to at least lead the way somewhat to the downside. So let's watch that. If there's really strength for some reason, we're looking at a rotational correction, and you could just go sideways in a trading band. So we'll be back for the final segment straight after this, and we're looking at in the den. Dave White said Disney, it was down. Okay. So Disney's quite nice. It's up 42 cents. It was down before. Now it's up. Okay. We'll talk about that when we get back. Basil Chapman, sitting in for Tom O'Brien. This is the Tom O'Brien Show. Dow's down 100. I'll be right back.
Larry Pezzavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. Wrapping up time. This is Basil Chapman sitting in for the one and only Tom O'Brien. Happy birthday, Tom. And thanks for all you do for TFNN. And right now we're looking at a Dow that's down 101, S&P's down 10, and we're looking at XOP. The question, I had a whole bunch of emails come in here. You could also give these emails to me at basilchapman@tfnn.com, and I love to answer these questions during my show, noon till 1 p.m. every day, Eastern Time. Right here at TFNN. This is the Tiger Technicians Hour, and my opening call is my daily newsletter. Let me just quickly show you the front page of TFNN. There's an opening call subscriber event November the 20th. What can we anticipate for 2018? And we're going to be looking at all these different spectrums that are really important to the market. And you can sign up if you aren't a subscriber, and you will get my newsletter for a month free. And this will be archived. You'll be able to listen to the webinar as many times as you want. So go to the front page, check it out. Now, let's just make it as simple as possible. If by tomorrow, NVIDIA is now up 6 or 7 points, at this point it's down 4, but it's up 6 or 7 points, and it's helping the SMHs and the general market. The Dow is actually up 50 points by 11:10 tomorrow Eastern Time. That's really good action. If it's down 50 points and the SMHs are down and NVIDIA is down 5 or 6 points, that's saying we are in for some kind of a consolidation. The reason why I'm looking more at consolidation is that there are news events here that could impact negatively the market, and you need a dark cloud overhanging the market with the volatility index running sharply and the futures doing exactly what they did today, except we close more towards the upper end of the range. You want to see the futures close towards the lower end of the range every day, and you want to see if there are sectors like Macy's just showed that it could be a bit of a bounce. You want to see the RTH, maybe the retail sector, start to move a little higher, maybe as other sectors are weakening. If everything goes down, then we're in for a very sharp decline. The RTH did act well today. I think it's because of Macy's. So keep that in mind. There's a rotational aspect it's not the broad market that has to go down. Some sectors keep rallying while others take a breather. Some have been fantastic, like the semis. They could have a rest. Basil Chapman sitting in for Tom O'Brien. Check out my show. Check out my opening call. And I hope you have a wonderful evening. I'll be back for my show tomorrow at noon.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.